Good morning, everybody. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we welcome you to our breakfast meeting this morning. It is Wednesday, the 27th of October, 2021. As always, this meeting is being recorded and the audio file may be shared with third parties. The meeting is also being streamed live on our Vetiva online page on Facebook if you prefer to view from that platform. On our agenda today, we will get a recap of Wednesday's activities from the capital markets from our traders, after which we will move to Frontier Africa Reports with their updates for today. If you do have a question over the course of the meeting over what our presenters are saying, you may drop them in the Q&A box and we'll treat them after all speakers are done. We will now start off with Cynthia from our Global Equities Desk. Good morning, Cynthia.
Good morning, Dosia, and good morning to everyone. So like you mentioned, I'll be doing a quick recap of yesterday's activities across some West African markets. And I'll be starting in BRVM, where we have continued to see the composite index maintaining its bullish trend, closing up 77 basis points yesterday. This was largely on the back of gains recorded in the industrial and agricultural sectors. Among the top gainers were Solibra, SICO, and NEIC, all advancing by about 7%. For market activity, this traded mixed yesterday with volume declining by 81%, as we noticed that the market was lifted on the back of small volumes, while turnover improved by 8%. Going into today, we expect the market to recover in terms of market activity and the possibility of investors starting to take profits on recent gainers. In Ghana, activity in the market continues to dwindle even as we approach the Q3 earnings period. However, due to gains recorded in Republic Bank Ghana on the back of its impressive Q3 numbers, and Enterprise Group, the composite index closed up by 15 basis points, with year-to-date return for the market now at 47%. Going into today, we expect activity levels to remain flat given the reduced local buy pressure. Like we've always mentioned, for any of our listeners looking at exposure to any of these markets, they can reach out to us via email at dealing@vetiva.com and to our sales team at sales@vetiva.com, and we'll get back to them. And finally, in Nigeria, the market closed flat with the index inching up by just 0.2 points, as we saw an almost even split in the number of stocks that declined versus the gainers. On the side of losers, we had NGX Group closing down for the third consecutive session, as it appears the rally we saw at inception has been short-lived. We also saw Nigerian breweries and honey flour in the consumer goods space closing down, while investors took profits in Oando after its recent capital gain, closing the oil and gas index down by 38 basis points. Speaking to market activity, this trended down with volume and turnover declining by 48% and 26% respectively. So the general sentiment in the market right now, or should I say the catalyst we're seeing currently has been the Q3 corporate earnings, where investors are taking position ahead. And for the companies that have released impressive results, we are seeing the market reacting positively with share price appreciation. So we expect investors to ride on this wave in the short term, while still taking profit, while still taking positions in fundamentally sound names. Thank you, and I'll be from the Equities Desk.
Thank you, Symbiote. We will now move to Omorige for fixed income and currencies. Good morning, Omorige.
Good morning, everybody. Supported by the OMO repayment of about 93 billion that came into the system yesterday, system liquidity improved significantly to open at 783 million positive, coming from the 243 billion negative that was recorded on Monday. As a result of the improvement in system liquidity, interbank rate declined by an average of 88 basis points as OBB and overnight rate closed at 14.5% and 15.25% respectively. For today, we expect interbank rate to trade at lower levels on the back of coupon payment of about 47 billion that's coming into the system today. The parallel market traded at 570 naira to $1 yesterday, while the earning window opened at 414.04 naira to $1. The highest trade that was recorded yesterday was 444 naira to $1, while the closing rate was 415.10 naira to $1. Brent and WTI both lost about 0.3% to open today at 86.15 and $84.39 per barrel respectively, after data released showed that US fuel inventories increased more than expected last week. The TB's market traded on the tepid note yesterday as market players decided to stay on the sidelines ahead of the NTB auction that is happening today. We observed interest on the short-dated maturities, especially on the 27 January 2022 and the 28 April 2022 maturities, while trades were majorly consummated on the 28 April 2022 maturity and the CBN special NTB, that's the 29th November 2021. Overall, average benchmark rate remained unchanged at 5.2%. Despite the OMO repayment of about 93 billion that came into the system yesterday, the OMO market traded on a muted note with few interest on the short-dated to long-dated maturities, especially on the January 2022, February 2022, and the 4th October 2022 maturities, while trades were majorly consummated on the 15th February 2022 maturity. At the auction today, the DMO is offering a total of 150.04 billion across the three usual tenors. On the 91-day, the total amount on offer on that end is 3.17 billion. We expect the marginal rate to maintain at 2.5%. On the 182 days, the total amount on offer on that end is 6 billion. We also expect the marginal rate to maintain at 3.5%. On the 364 days, the total amount on offer on that end is 140.87 billion. The last stop rate was 7.25%, given where the secondary market is currently trading. It's currently trading at 6.8% to 7% levels. We expect the marginal rate to fall between 7% to 7.5%. And this basically depends on what the DMO decides to do. If they decide to take everything that they have on offer, we might see the rate inch up around the 7.25% region. But then if they decide to just take less or exactly what they have on offer, the marginal rate might fall between 6.8 to 7% levels. That's why we are sticking with the 7% to 7.5% band. The bonds market traded on a relatively active note yesterday, with bullish sentiment seen along the mid to long end of the benchmark curve as market players try to reinvest the coupon payment of about 121 billion on the 2029 and the 2049 papers. We also witnessed activities majorly on the 2035, 2049, and the 2050, while trades were majorly consummated on the 2029 and the 2037 maturities. Overall, average benchmark rates declined by about 2 basis points to close yesterday at 12.09%. The Eurobond market traded on a very active note yesterday, with buy-side interest majorly across the sovereigns. The most actively traded sovereigns yesterday were the Nigeria 2025, 2032, 2038, 2047, 2049, and 2051. On the other hand, the corporate space traded on a very muted note, with few sell-side interest on the Zenith Bank 2022 Eurobond. For today, we expect the bonds market to continue to trade with bullish sentiment as market players try to reinvest inflows from bond coupon payments of about 47.05 billion on the 2023 maturity, while we also expect the TB's market to trade on a muted note as market players focus on the outcome of the NTB auction that is holding today. That'll be all for fixed income. Thank you.
Thank you very much, Morgan. We will now conclude with Justina from Frontier Africa Reports and their updates. Good morning, Justina.
Good morning. Good morning, everyone. Yeah, we start here from the North African region, where Deutsche Bank says it expects Egypt's economy to grow 5.5% in the fiscal year of 2021 and 2022. It also says that it expects robust growth rebounds to continue into the new fiscal year. Meanwhile, Algeria is set to cease gas supplies to Morocco starting next week, Monday. That's November 1. Their 25-year gas distribution contract ends this Sunday. And speaking of Morocco, the country says it's in the process of creating a public company to supervise a natural gas supply project from Nigeria, which is considered right now as Africa's largest gas infrastructure project. Also, Wema Bank yesterday released a notice and said it will stop collecting 50 and 20 pound notes from January 2022, as the Bank of England has asked that the circulation of these notes be withdrawn. Also, the Central African Stock Exchange, that's the BVMark, says it is planning to create a stock trading academy in the dollar region, that's the economic capital of Cameroon. Now, China says allegations that the country has caused a debt trap for Africa through its lending practices are false and politically driven. And it says that the allegations were in order to drive a wedge between China and Africa's cooperative relations. South Africa's leading business cycle index edged up 0.7% in August from a downward revision of 2.4% drop in the previous month. Also, in the East African region, Tanzania says it is investing $531 million into 2 mining projects in 2022. The government is also speaking about stakes in these 2 projects. German-based underwriter, that's Alliance, says it has acquired 66% stake in Jubilee Insurance Company of Uganda. And those are some of the stories we have here from Frontier Africa Reports. Thank you for listening.
Thank you, Justina. We have now come to the Q&A session of the meeting. If you would like to speak, you may raise your hand and we will give you an opportunity to ask your question, or you may drop your question in the Q&A box and we will respond. I see Joshua has his hand up. Joshua, you may please go ahead and speak.
All right, thank you, Chidozie. Good morning, everyone. I just want to quickly go over the GTCO 9-month results. So they released their results yesterday, and they showed for the 9-month period, they reported gross earnings of about 319 billion. So this is a 12% lower year on year. However, we do know that the Q3 performance was significantly improved from Q2 21. So we saw an improvement in gross earnings of about 9% to just under 111 billion for the period. Now, interest income for 9 months was about 195 billion, which is still significantly trailing the 228 billion that they reported last year. However, we do know that this came as a result of some recovery in loans in the interest income from loans and advances, which did grow year on year for the period. So we saw that yield on assets stayed pretty consistent at about 7.4%. However, they did grow their assets from about 5 trillion in Q2 to about 5.1 in Q3. So this sort of improved their earnings and their yield on assets. Net interest margin also was pretty much flat, and so because of that, the overall net interest expense, the overall interest expense was down by about 17% year on year. So the net interest income came in at about 163 billion, which is 14% lower year on year. Now, the non-interest revenue has remained strong. We've seen this for the past couple of quarters, and it grew by 19% year on year and improved in Q3 by about 4% to about 119 billion as well. And so their total operating income was only down by about 3% year on year. In terms of impairments, we saw impairments grow at a slower pace. to just under 6 billion. So it's 41% lower year on year. And this sort of follows the trend we've seen with the other banks with regards to increased recovery during the period, as well as lower impairments. So this is a positive sign. On top of that, operating expenses grew by about 10% year on year. And we note that AMCON levy this year appears to be quite significantly lower than the percentage used last year. So it came in at just under 22 billion, which is 27% higher, but obviously this is due to the increase in assets. Now, overall, the profit before tax was 9% lower year on year at about 152 billion, and profit after tax came in at 129 billion, which is also 9% lower year on year. But quarter on quarter, we saw an almost 50% improvement in both line items. And so this bodes well, obviously, for the second half of the year. And we will have a full report out later today. Thank you very much.
Thank you very much, Joshua. We still have time for further questions. So if you have any questions, you may raise your hand or drop them in the Q&A box. While we wait for questions, on Friday, that is October 29th, Joshua Dempsey, our banking analyst, will be speaking to us on Fidelity Bank, a compelling player in the tier one space. So that will be on Friday morning at our breakfast meeting. I see we have no further questions today. Sorry, my mistake. Okay, so we do have a question, and it says, it looks like GTB has gotten to the apex of its profit-making ability, looking at the last 2 quarters of decline in year-on-year PAT. Is there still upside for the name? Access and UBA are still improving their profits. I believe Joshua will take this question.
Thank you very much, Chidozie. So I disagree with the premise that GT has reached the apex of its profit-making ability. But firstly, to address the issue of UBA and Access, first of all, those two are broadly Pan-African banks. And if we look at their results, we see that their their international activities have actually helped to boost profitability, especially in the case of UBA. You know that UBA's international subsidiaries contribute almost 50% of PAT. And so any sort of increases or improvements seen there would obviously boost profitability. Now, with regards to GTB, as we've seen, the Q3 performance is closer to the levels of profits that we were seeing in 2020. And in actuality, I'd say that it's more a case of GTCO being quite conservative this year, obviously due to some of the difficulties being faced. But the fact that, impairments are significantly lower year on year, and their non-interest revenue still grew by about almost 20%, proves that there is still quite significant upside for growth. Now, obviously, their interest income did not perform at the same levels as seen last year. However, we can argue that this was down to interest rates environments and the level of yield in the fixed income market. So any kind of recovery there would see a rebound in their interest income and net interest margin. And overall, we have to remember that their cost to income ratio is still pretty much the lowest in the industry. It's significantly higher than last year. It's at about 44%, it's tracking at about 44% currently, but that's still well below 50%. And then their MPLs are actually at about 6.1% currently. So that's still slightly higher than we see in some of their peers. So if they're able to address those issues while continuing to improve on non-interest revenue, which is part of the reason why they changed to a holdco structure, and we'll probably start to see the benefits of that from Q1 next year, there is definitely still significant upside with regards to profitability for GTCO. Thank you.
Thank you very much, Joshua. I hope that answers the question. We still have time for further questions, so you may drop them in the Q&A box, or you may raise your hand and we will give you an opportunity to ask your question. Again, while we wait, on Friday, October 29, Joshua, WCR banking analyst, will be speaking with us on Fidelity Bank, a compliant player in the Tier 1 space. I see we have no further questions today. On behalf of Vetiva Capital and our media partners at Frontier Africa Reports, we would like to thank you all for joining us on our breakfast meeting this morning, and we look forward to having you join us again tomorrow at 8:30. Good morning.